Hello, everyone, and welcome back to the Euro Investor, your go-to guide for smart, simple investing in Europe. In today's video, we're going to break down how to build a long-term ETF portfolio as an European investor. We'll cover 3 sample portfolios: conservative, balanced, and growth, so you can see real examples and decide what fits you best. If you find this helpful, don't forget to like, subscribe, and hit the notification bell. So why to build a portfolio? Before we jump in, let's talk about why building a portfolio is so important. A portfolio helps you spread risk across different assets, sectors, and regions, and it's one of the keys to successful long-term investing. For most European investors, ETFs are a great tool to achieve this diversification because they're low cost and easy to buy. When building your portfolio, here are 3 key principles to keep in mind. The first principle is diversify across geographies, sectors, and asset classes. 2. Keep costs low. Choose ETFs with low TER, which is total expense ratio. 3. Stay consistent, investing regularly, preferably monthly. This matters more than timing the market. Portfolio number 1. First, let's start with the conservative portfolio. This is perfect if you're close to retirement, value stability, or don't want to invest too much time or effort in the activity. Example allocation, 60% bonds. A good example is iShares Euro Government Bond ETF, and 40% global stocks, such as Vanguard FTSE All World ETF. The bond allocation cushions your portfolio from market drops, while still giving you growth potential. Portfolio number 2. A balanced portfolio. This is great for most people who want some growth and can handle some ups and downs. Example allocation, 60% should contain global stocks. This can mean iShares MSCI World ETF. The next 30% should be filled in with bonds, such as Xtrackers Euro Corporate Bond ETF, and the rest of 10% should be in gold. This mix helps smooth out volatility, especially during market downturns. Portfolio number 3. Finally, if you're younger or can tolerate more risk, the growth portfolio is the one for you. Example, allocation. 80% to 90% of your portfolio should contain global stocks. For example, Vanguard FTSE All World for global. And for Europe, Spider MSCI is a good choice. And only 10% to 20% should contain bonds. Only some short-term government bonds for a bit of stability. If you want to go all in with stocks and you are young, this is the perfect time to take this step. This is where you'll see bigger swings in value, but historically, it also offers the highest returns over decades. Now I have for you a bonus portfolio, the aggressive investor. If you consider yourself an aggressive investor, you can also take into consideration to add the following to your portfolio. 30% some high-growth sectors such as tech, small cap, and some emerging markets ETFs. 20% should go to crypto coins, such as Bitcoin and Ethereum, and around 5% in cash for buying the dips. Because they will come. This swings wildly, but also great risks can provide great returns. A good rule of thumb is allocating a percentage of your portfolio to bonds based on your age and subtracting 10. This is a common guideline in financial planning, also recommended by Jack Bogle, the co-founder of the Vanguard Group, and is used to help investors determine a suitable asset allocation mix based on their risk, tolerance, and time horizon. For example, if you are 20, your portfolio should have 10% bonds and 90% ETFs or stocks. If you're 60, you should have 50% bonds and 50% ETFs. As you age, you should gradually move your portfolio towards a more secure terrain. And while you are young, you can risk more and thus learn more. So, how do you actually build and maintain these portfolios? First things first, choose low-fee brokers. Brokers just as Trading 212, Interactive Brokers, or DeGiro. If you want more details about each of them, you can check my early video and see what's best for you, based on your country residence. I will post the link in the description. Next step is to buy the ETFs in your chosen allocations. The third step would be to rebalance once or twice every couple of years. And what do I mean by that? Here, you should take the time to adjust your portfolio based on your target percentages, based on the world news, and, ultimately, based on your age. While we live, we learn, so priorities change. And the final step is stay consistent. This means to invest monthly or at least quarterly. And that's it. These are the 3 examples of how to build a long-term ETF portfolio in Europe. Now pick one, but don't overthink it. You already know what you need. Drop a comment and let me know. Conservative, balanced, or growth? Next, if you want to see my picks for the top 5 ETFs for Europeans in 2025, make sure you subscribe. That video is coming soon. Thanks for watching and happy investing.